Hello and welcome back to my 10 favorite people. Hope you're doing well. I'm incredibly excited for today's video because Bitcoin is looking very strong here. It held the 50-week moving average. It held above the March high. It's now reclaiming our previous range, and we remained calm and collected while everyone else kept lowering their price targets. And it's crazy to think that it's only been just over 3 months since I first published this chart in a video called Are You Ready? And the only way to actually remain calm during these corrections is to have a plan and system and to be prepared for various outcomes and their probabilities of occurring. The reason why we thought it was likely Bitcoin would trade back below 90K was because of the extreme euphoria and risk-taking we were seeing at the highs with meme coins and Trump's inauguration. The reason why we thought it was possible that Bitcoin could revisit the mid 70,000s was because that's where the 50-week moving average was going to be, and that has been support for this entire cycle so far. And it's also right above Bitcoin's previous March high, and every time this cycle, Bitcoin has come close to retesting the previous highs but hasn't quite reached that area. So we thought it was possible that Bitcoin could revisit that support region. But the reason why I thought it was unlikely that Bitcoin would go back to the 60,000s on this correction is because usually once everybody wants to buy Bitcoin on a revisit of a previous consolidation range, price loves to front run that area, just like it front ran the 40,000s in the August 2024 correction, and it front ran the 20,000s in the September 2023 correction. And usually whenever everybody is targeting a similar price, it gets front run by larger buyers. And with this week's price action, Bitcoin is back to following the early cycle scenario. And if we do enter a very aggressive rally here straight to new all-time highs, I think that would increase the likelihood that we see an early peak this cycle. Whereas if we spend more time consolidating and turning it into a slower climb, perhaps we could have the normal cycle scenario where Bitcoin rallies later into the year. I do think these two outcomes are way more likely than the cycle being over, and that's what we said during the entire correction when many people were giving up hope. But we'll have more clarity on which of these two outcomes will happen once we see more price action and see how long it takes Bitcoin to make new highs. It is nice to see sentiment recovering for the first time in months. The CoinMarketCap Fear and Greed Index is back in the neutral region, and just like fear and uncertainty seems impossible when the market is euphoric, greed coming back once again also seems impossible when the market is extremely fearful. But we've seen this constant cycle of market sentiment in this market and during this market cycle. And after weeks of investors calling for 60,000 and 50,000 and 40,000 per Bitcoin, we now have many market participants eyeing 100K, and many bears are scrambling to cover their short positions if they haven't been liquidated already. And this took me forever to realize, but markets always bottom when things look the absolute worst and nobody wants to buy, and markets peak when things look the absolute best and nobody wants to sell. This is exactly why I love writing the free weekly report, because I can go back and look at what my emotions were like at a market top or market bottom. This one is from April 7th of 2025, which was the exact day that Bitcoin bottomed at about 74,000. And I wrote that my system called for some cash deployment for this week's portfolio rebalancing. It was hard to do as I have no idea what will happen in the short term. But every time I have followed my system and ignored my emotions in the past, I ended up being very happy that I did. And what do you know? I ignored my emotions, bought the dip, and Bitcoin is up about 20% in 2 weeks since that time period. And the funny thing is, I wrote the exact same thing on December 16th, which was the day before Bitcoin topped. And I wrote that I took some small profits across all my holdings this morning and moved them into cash. It was incredibly hard to do because their charts look quite bullish. And what do you know, even though I didn't want to take any profits there, the market ended up dropping just under 20% a few days later. And this is why I always emphasize the value of having your own system that you can follow, because relying on your emotions or what the market narratives are telling you is never going to work. If you're interested in learning about my system in a more structured way, early bird pricing is still available for 5 more days on the Crypto and Macro Enjoyers program. I'm going to have that pricing until the end of April. So if that interests you, feel free to check it out in the video description. But let's go ahead and talk about something we've been covering for a long time, but now way more people seem to be focused on, and that's the increase we've been seeing in global liquidity. And now this isn't just M2, it does include the global money supply as one variable that it measures, but it also includes other things that I find very important, like what is the Federal Reserve doing with their balance sheet? Are they doing quantitative tightening? Are they doing quantitative easing? It also looks at the US Treasury General Account. It looks at the European Central Bank, the People's Bank of China, and the Bank of Japan, which are the major central banks globally. So it includes what those central banks are doing with their balance sheets, as well as the money supply, and it creates this global liquidity index that has been so useful for us this cycle. And I want to be very clear that I don't think global liquidity is some magic data point that will always predict Bitcoin perfectly. I like to use it alongside other data points like market sentiment and like Bitcoin's price action and technical analysis to come up with some overall probabilities of what I think is most likely going to happen. For example, if I see global liquidity going down compared with extremely greedy sentiment and some bearish price action from Bitcoin, like a bearish engulfing candle, I'll be concerned about price action in the short term. But on the other end, if I see global liquidity skyrocketing while the market is extremely fearful and Bitcoin is holding support, then I'm going to be bullish on Bitcoin's price action over the next few weeks to months. And we do have something very rare happening right now. We have global liquidity seeing a macro breakout, something we've only seen 2 times previously. The past 2 times global liquidity found a bottom, so did Bitcoin. And the last 2 times that global liquidity broke out, Bitcoin's bull market accelerated in 2017 and in 2020 and 2021. And we saw Bitcoin bottom alongside global liquidity once again. We're seeing global liquidity have another macro breakout today, and it looks likely that Bitcoin is going to follow, especially because the federal government is still running these huge deficits. Doge did say they were going to try to reduce it. They were talking about cutting 1 trillion in spending, when in reality now it looks like they're going to struggle to even get much past 100 billion in spending cuts. And this is just because spending cuts always get way too much pushback. It sounds like a great idea and everybody is on board when the market is up and everybody is happening. But as soon as people start losing their jobs and as soon as the stock market starts going down, everybody throws that patience out the window and everybody gets upset with the spending cuts. And that's why I don't see this trend of huge national deficits getting better anytime soon. Because if you have exponential debt growth with this much momentum, you can break many important things if you try to reverse a trend that's been going on for decades. And Trump also learned this the hard way. With all of the tariff drama we've been seeing over the past few weeks, we saw US bonds start to sell off, and what do you know, Trump started pivoting his view quite quickly, because when you have an economy with this much debt, it's very important that your debt is getting bought and you're able to fund yourself. And seeing yields jump on the bond market forced Trump's hand, the same way the pushback that Doge was receiving is kind of forcing Elon to backpedal a little bit as well. So we'll continue to monitor this global liquidity breakout and see if it plays out like the previous 2 and we see a huge expansion in global liquidity. If we do, I think that would be very bullish for Bitcoin and other risk assets, especially because of the weakness we've seen in the US dollar. We know that as the US dollar is the global reserve currency, central banks around the world need a cheaper dollar so they can weaken their currencies and ease as well. And with the US dollar index falling off a cliff here, maybe it ends up seeing a couple bounces on the way down. But as of right now, it looks like it's headed in one direction after seeing that huge blow off top move in 2022, a big sell off. It's been going sideways, one last bounce into the 109 level, and now it looks like it's going to have a huge breakdown after this 3-year consolidation and break in its structure. And what do you know? The past two times the US dollar index saw a very large prolonged breakdown below the 100 level, Bitcoin ended up having its biggest rallies and its mania phases. So we're going to be seeing if this time is going to be the same, especially if we actually see that follow through on the US dollar index. And with the market pricing in Fed rate cuts and the likelihood that the Fed is going to start cutting rates by more than the market currently anticipates, because we have inflation falling, we have the labor market weakening, and with the recent uncertainty and sell-off we've seen in the stock market, people seeing their portfolios go down tends to reduce spending, which is deflationary, and all of this economic uncertainty significantly slows down hiring and job growth as well, and I think that will give the Fed more room to cut, which should put more downward pressure on the US dollar and more upward pressure on global liquidity. But what I'm incredibly impressed with is how well Bitcoin was able to hold up during all of this drama and this S&P 500 sell-off, and I'm sure investors around the world noticed as well. The head of strategy at Coinbase Institutional said that sovereign wealth funds have been piling into Bitcoin as retail exits, and if you don't want to believe them, a BlackRock executive said that geopolitical tensions fuel central bank shift toward gold and crypto, and if you don't want to believe him either, we saw this very clearly in the on-chain data. We were talking about whales buying Bitcoin while retail was panicking. You can see this very clearly if we look at the balance of large holders, wallets that hold between 1,000 and 10,000 Bitcoin. You can see that during this entire correction, those wallets have been accumulating more and more, which is very similar to what we saw towards the end of our correction in Q3 of last year, when we saw the balances of these wallets increasing and then price followed soon after. Fidelity is telling clients that Bitcoin supply on exchanges is falling due to public company purchases. We're seeing this with various firms out of Asia. We've of course seen a ton of it from MicroStrategy. And even if you don't want to believe these narratives, the on-chain data doesn't lie. We're seeing a lot of Bitcoin leaving these exchanges, and this is good for price in the longer term, as we're seeing a lot of this supply locked up and taken off the market. So we're seeing demand from sovereign wealth funds, we're seeing demand from corporate treasuries, and of course we're seeing a ton of demand from institutions, with Bitcoin ETFs seeing $3 billion in inflows this week. And if you think $3 billion came in from 5 days from retail investors, I have a bridge in El Dorado to sell you. So we'll see what happens. It's very hard not to be optimistic with this backdrop. It does look like a lot of our narratives are aligning for one major finale over the next few months, but we'll see how that plays out. As of right now, Bitcoin is finally breaking out of our fair value range and starting to pull away from its 200-week moving average. I would love to see us revisit this very expensive region within the next few months, but we'll continue to monitor price action and see how that plays out for Bitcoin and this industry as a whole. And speaking of the crypto industry as a whole, we saw huge news this week that the Federal Reserve is withdrawing their crypto unfriendly banking guidance that they first put out in 2022, making it essentially illegal for banks to deal with anything crypto related. We also saw our new SEC chairman. Again, don't know how this gentleman is going to do, but compared to what we had before, very hard for me to imagine that this is going to be worse than what we dealt with over the past few years. And I know regulatory clarity is this vague thing that's hard to kind of measure, but here's an example of what it allows. Stripe, one of the largest payment platforms in the world, who did about $1.4 trillion in payment volume last year, is launching a new stablecoin product. And the CEO said that they've wanted to build this product for around a decade, and it's now finally happening. And I'm expecting that we're going to see a lot of this, a lot of companies starting to step into this industry now that they don't have to worry about legal action and getting shut down or sued for touching this asset class and technology. We're seeing something similar from Deloitte, one of the big four accounting firms, predicting $4 trillion in tokenized real estate on blockchain by 2035. And we've been seeing BlackRock, the largest asset manager in the world, start to tokenize US treasuries on chain with their $2.5 billion BUIDL fund. And it does seem like this is the early signs of a major trend shift now that we have this regulatory clarity and these new legal frameworks. So I'm bullish on projects like Ethereum going forward, and we're still seeing nice continuation of that price action with the deviation below our swing lows of August 2023 and a retest of our 2017 high of about 1400. It's insane that investors were able to buy Ethereum at the price that it peaked at 8 years ago. And we did see Ethereum Bitcoin so far bottom right where it did in the 2019 bear market. So this is the line in the sand where Ethereum has to hold. If we see it break down here, Ethereum is likely done for, and it's likely due to the fact that projects like Solana are just taking too much market share by being so much cheaper to use and so much faster. And we're seeing nice price action from Solana against Bitcoin as well, bottoming where it did in December of 2023 and seeing a decent recovery as of right now. So we'll see what happens. We have Solana back in the green on a year-over-year basis. Ethereum still down 42%, which is atrocious, but Bitcoin up 48% over the past year. Even with all of the tariff drama and all of the macro uncertainty, Bitcoin is showing the early signs of a narrative shift and of its digital gold narrative starting to gain a little bit more steam, because the only asset that's done better than Bitcoin during all of this uncertainty was gold. So we'll see what happens with tomorrow's weekly close. As of right now, this is a breakout out of the consolidation range we've been in, and it's the early signs of a reclaim of our previous range that we broke down from a few months ago, which is incredibly bullish in the short term, as long as Bitcoin is able to reclaim that level. But as we look forward at the longer term, the federal government is still running huge deficits. And even with all of the talk about Doge and cost cutting and efficiency, we are still 23% above the deficit that we had last year. And this trend seems to be worsening. I just have a very hard time seeing any other way for the federal government to fund itself. Nobody wants higher taxes. Nobody wants to cut spending. And when you have this much momentum on an exponential trend, it is very hard to reverse it. And usually it just carries on and gets a lot worse before it gets better. So as long as we see exponential debt growth, the currency that we price our risk assets in will continue to be devalued. So I remain bullish on assets like the S&P 500 and very bullish on fixed supply risk assets like Bitcoin. But as always, let me know what you expect. We'll see what happens. Thank you so much for the support on the recent videos. Thank you so much for watching, and I'll talk to you soon.